Welcome to the Start, Build, Grow Show. Hey, today's topic is one of the most fun topics that we love to hate. We are talking about financials. We are talking about running your business by the books, running by the numbers, understanding what numbers mean, and how to really, dial in your cash flow and cash flow challenges as a service-based contractor. So you are going to want to stay tuned. All right, we're going to welcome in my man Jakob Kirschner with Peak Advisory. He's resident expert in the financial world and in the trade space, and covers roofing as well as a number of service different industries. And here's the deal: this is one of the most important, but also one of the most challenging, and I would even say one of the most neglected areas of our businesses. So we're going to dive in, and I'm going to challenge him as best I can to get as much. Welcome in, Jakob.
Thank you. Thanks for having me.
Love it, man. So accent, brother. I'm right off the back. You got an accent. Where are you from?
I'm from Germany, but you can really tell by just me saying hello.
Yeah, man. Which is awesome, though. I love that. It's funny. In high school, I took some German classes, so I can count to 10 and say hello and say my name
Guten
and a few
Tag, guten Tag.
things. Yeah, guten Tag, gute Nacht
Yeah.
afterwards. So welcome in, man. This is a show about entrepreneurship. Our mission is to help serve the contractor trade space and help contractors be as successful as possible. And this is a topic that we probably don't talk about enough because it's vitally important to run your business by the numbers. So, but as an entrepreneurial show, you're an entrepreneur now, and maybe you weren't always an entrepreneur. Give me a little backstory on your story.
Yeah, I'd love to. As you said, I'm from Germany, Stuttgart area, the home of Porsche and Mercedes.
Yeah, buddy.
I love cars.
Oh, me
And
too. That's a whole nother. Maybe we'll do a show on that,
different
man. I'm
topic,
a
yeah.
big Porsche guy myself.
So my career path is pretty much the opposite of a straight line. When I was younger, I just did all sorts of different things. I worked in construction for a while. I worked in manufacturing, logistics, sales, marketing. Like I've seen a lot of different areas of the business. And it wasn't until I got kids that I got serious about my career. And I went to university to get my finance degree. And I worked many years in manufacturing, international manufacturing companies. I started off with bookkeeping, accounting, and then corporate controlling. And at the end, I was responsible for the international subsidiaries. And they're usually small businesses with like 5 to 10 employees and usually focused on sales. And we just have, monthly strategy meetings, going over the numbers and showing the sales guys how to improve the numbers.
Love it.
And yeah, I started my business here about beginning of last year, and because I just wanted to increase my reach. Like it was fun helping the guys from my company, but yeah, I'm passionate about the construction industry. I just love those people, hardworking, down to earth, and yeah, I'm passionate about helping people to become the best they can be, and that's what I'm doing now in the financial area.
And I love that. Before I dive into some of the challenges, I think there's a huge takeaway there because if you're passionate about it, like you love what you do and you love helping others, I think there's an incredible takeaway. So if you're listening to this, you're an entrepreneur and you're not like passionate about what you do and about the purpose of what you do, you really got to lean into that because you're not going to find true happiness or true success or true comfort or appreciation for every little thing in life if you're not kind of living with a purpose and following that passion. So that's why I do this. I mean, we do the show. We're passionate about helping
That's awesome.
contractors. I paid a
That's
lot
really
of dumb
awesome.
tax in my day and I made a
Who
lot of
didn't?
mistakes and somehow figured out how to build a really successful company. And I have a number of companies now, and it's a passion of mine to see and help others grow. And one of the things that I've learned to really focus on is teach people how to grow their business with the emphasis on focusing on the numbers. It becomes it's not it seems like a lot of people we come to the industry, we have a great sales background, maybe we can build an incredible product, and we never had any formal education. A lot of us didn't go to school. A lot of us didn't have any training on how to read P&Ls, didn't have any training on what a chart of accounts are or how to job cost properly. And we just hustle and we make a business happen, and then we prioritize sales and growth and hiring and all these other things, and we don't prioritize numbers. But I believe that there's a shift that happens when you see some of the organizations that make that transaction or make that transition into 5, 10, 15 larger, companies, millions of dollars. And a fundamental change happens with the leadership, is that they switch from just running their business by gut feeling and hustle, and they really understand, okay, I need to start running my business by the numbers. I need to start making decisions by the numbers. So give us some direction, my man. How do I make that transition? How do I try to embrace and understand the value, and what are some of the key, numbers that I really need to focus on to really make that transition as a leader in my business?
Yeah, I mean, when you start off, then as you said, you're good at selling your service or providing the service, and it works okay for a while. But once you want to scale, then you really have to have good data and not run your business based on your gut feeling, but really based on based on data. And so it's really important to focus on, do I have the right people in the right seat? Is my bookkeeper, did he actually learn how to be a bookkeeper, or did he just watch a YouTube course, for like a week or something? And if you want to grow, then you have to have really good data. And uh, one of the things that I really focus on is a cash flow forecast. You have to be able to have a forecast, like what's going to happen a few weeks down the road, a few months down the road. How do my decisions that I take today, how do they affect my finances 3 months down the road, 6 months down the road?
Wow, yeah, that's important. I mean, in the trade space, it seems like it can be really difficult to create that model. Like, how do I project my cash? So, do you have a couple tips for us on some things, or maybe some reports that I should be, looking at, or maybe asking my bookkeeper, or looking for to help me create a little bit better forecasting?
Yeah, I mean, your bookkeeper, if he's a good bookkeeper, he provides the P&L, the balance sheet, and the cash flow statement. Um, Cash flow statement is often overlooked. It looks back and shows you how your cash changed. Like, you started the month off with, let's say, $20,000 in the bank, and at the end of the month, you have $30,000 in the bank, and you kind of have a rough idea. But how did that change really happen? Was it because I was just selling stuff that I had in inventory, or just because I called some customers that were late with paying their bills, or did I really make good sales? So it's really, you want to know the details, how you got to where you are. And a forecast, that's looking into the future. And the best way to start is you take your P&L from the last 3 months or 12 months, and you kind of see, and then you go line by line. You start with your banking balance at the beginning of the month, and then you want to record everything that's cash in. For example, a customer pays you, or yeah, that's pretty much
Deposits, right? Collect
deposits.
old
Yeah,
old AR
prepaid.
deposits, close out
Yeah.
jobs.
And then you want to record all the expenses, all the cash outs that you have. And the P&L has most of them in it, but not all of them. And that's why sometimes it's misleading. You think your P&L tells you you made a good profit, but you still don't have any money in your bank account. That's because some things like owner's draw or debt service, it doesn't show on the P&L. That's taken off of your profit. And same thing with when you buy inventory, or what else? Yeah, these are the main things, and you just need to add those. Or when you pay off credit card debt, then you want to see that as well. Or tax payments, it's technically not your business's expenses, but you usually take it still out of the business account. So you want to record that and go down. Um, you know, Depending on how your business is, you want to do a daily forecast. If you're really cash strapped and you're not sure if you're going to make it until next week, then you want to see every day, like, who do I have to call today to get the money back from my customers so I can pay my suppliers tomorrow, that kind of thing. And once you're in a better position, then a weekly forecast or even a monthly forecast is good. It just gives
Yeah, I
you that
love it.
horizon. And then like, okay, there will be a tax payment due in May. Will I have enough cash in the bank by May? Or what happens if my revenue goes down by 10%? Where, in what position does that put me? And what would I have to do in that case? So kind of you're able to prepare yourself for different scenarios.
Yeah. Well, I think that's so profound because a lot of us, we may have come up from a perspective of open up, open up the good old checking account and see what kind of money's in there. And cool, I got money in there. Now I can go spend it. But it's not as easy as that, right? A lot of us kind of have that perception and we maybe just run our business like that, but it doesn't
Yeah,
work that way. You've got to learn how to really document all your cash in, all your cash out, what your expected cash in, which everything that's been invoiced, how long, and some data, some time metrics that I like to track is, what's your average days to collect? Like
yeah,
when you send an invoice out, on average, how many days does it take you to collect that invoice? One, you can, if it's long, then you can find ways to sharpen that up and make it shorter. But once you have that metric, you can now create predictability of like, okay, on average, if I invoice $100,000 this week, I know this can take me on average of 8 days to collect that. So in 8 days, I should probably I'll have $100,000 influx in the business. Same thing
exactly.
with cash out. It's, and I, little tip and trick we try to use, and correct me, if this is something you guys are doing or not, but we try to always pay our bills like right when they're due. So we put a date in, when is it due? And instead of way early or way late or bunching it all together, we actually try to like spread that cash out as much as possible to like pay it
Absolutely.
right when it's due or as close to the due date as possible.
Yeah. And once you measure these things, then you get ready to manage them. Because if you look at your cash flow forecast and you see, okay, I'm going to be in a cash crunch, like I don't know, 2 weeks down the road, then all of a sudden your focus shifts on how can I keep that from happening. So then you look at your receivables outstanding. How many days are they usually outstanding? And then all of a sudden you realize if I work on getting that number down, then I have more cash in the business. And then also the example you just had, um, I pay my suppliers in time. I mean, yeah, it's important not to go late, but also at the right time, not too early. And then maybe one takeaway could be go to your biggest supplier and have a conversation with him and try to get better terms. So you don't have to pay in 30 days, but maybe 60 days. And that
You
will
know,
be a huge help for your cash flow.
Well, and another trick is credit cards, right? So you extend that out and then pay it with a credit card and then buy yourself another 30 days. But be careful because it can help you, but it can also hurt you if you
Yeah.
compound the if you're not generating enough cash in, then you're just buying yourself a time on the problem that you're creating for
Yeah,
yourself. So
I mean,
you gotta be
if
careful
you
there.
have a cash balance like couple a cash reserve, and then you can get some good payment terms. Like you can pay early and get 2% discount. But if you don't have a cash balance, a cash, what's the
Yeah.
word
Retain
usually?
earnings, yeah,
Cash retainer, yeah,
reserves,
then
yeah.
you end up having to pay 18-20% for a credit card if you can't pay it off in time. So it really pays off to be very good with your cash forecast and work on that cash reserve.
Yeah. Well, if you really think about it, I mean, say you process a couple million, 2, 3, 4 million dollars in a given year, right? And if you're paying interest on that or paying late fees on that, I mean, 5% on $3 million, it's $150,000.
That's
That's
a
a
lot, yeah.
salary, right? That's an owner disbursement. That's pretty nice. That's a new truck. That's a marketing investment. That's a trip. If you think about it that way, like, and then again, you can compound that even in a positive way if you're paying early and you're getting a little bit extra discounts. And now you're like, wow, you turn that 150, flip it upside down, and now that's all positive cash into your business just by being intentional and strategic with
And
when you're paying your bills
yeah,
and how
and
you're paying
it's
your
really
bills.
important not to despise the little thing. Like even if it's just if your net margin goes up 1% because you reduce your overhead, like interest payments, then it has a direct impact on your net profits, on the amount that you take home at the end of the day.
Absolutely. And if you're trying to build a business that has value in it to maybe sell it or do something, that's happening a lot in our industry. And that one extra percentage point, that 2, 3, 4, 5 extra percentage points makes a big difference. So here's something
Exactly.
profound that I heard from a friend of mine that I think some of you are gonna be like, holy crap. So if you think about your business from a perspective of value, right? Let's just put a 5x value on the average, 2 to 3 million, maybe $5 million. Let's say $2 to $5 million company. the average value is 5x EBITDA, right? Earnings before interest, depreciation, and amortization. Say that 10 times fast. I've had to practice that a bunch. So I have a lot of conversations. People are like, what the heck's EBITDA? Money left over at the end. Okay, we'll leave it at that before you pay taxes on it. And if you think about every decision that you make and in dollars that you spend or save, multiply that by 5.
Exactly. So if you have,
Whoa, that like absolutely blew my mind. I'm like, holy crap. Because there's like, you get into a situation where like, oh, this homeowner, think about if you're still covering deductibles, I'm sorry, we need to have a talk, man. Call me, let's talk. Like, punch yourself in the face. Because think about that. If you're selling a roof and you think you got to get the deal by covering a deductible, let's just say that deductible is $1,000, $1,000 right off the bottom line of your business. Do that a whole bunch of times, multiply that by 5, which is the valuation of your business. So not only are you covering quote unquote, covering $1,000 deductible, you're taking $5,000 in value off of every single job that you sell. When you think about it from that perspective, wow, it makes a big difference.
absolutely. And I think even like every small decision has a big impact long term on the business. So that's why it's so important to be diligent and to be focused on your financial decisions and not just do go by gut feeling.
Yeah. Yeah. The gut feeling is only gets you so far, right? But it can get you in trouble pretty quick too. Trust me, I'm guilty as charged on that one. So speaking of, you've worked with a number of contractors now. Let's talk about maybe some of the common mistakes that you see. What are some common mistakes that you see, a lot of us, blue collar hustlers make when we start and launch and try to build a business?
Yeah, I mean, we've circled around this already. It's really cash flow. Like mistake, like first of all, not paying enough attention to the whole cash flow topic, and just mistaking profit for cash. There's a big difference. You make profit the moment you bill your customer, um, but the cash only comes in once you actually get the money from your customer. And that time lag that you have, that's just, it can break your neck if you don't pay attention to it, because you can be profitable and still be broke.
Yeah. Yeah. I mean, if you have, I get to have this mindset. If we've accrued the profit, we've invoiced it, it's on a spreadsheet. I made 10 grand on this job. Is how long did it take you to get that money?
Yeah,
And unfortunately, if it's taking you a long time to get that money, you've already spent it before you've got it.
exactly.
So we got to shrink that, right? That the days sales outstanding metric, right? The cash conversion cycle in a business. And I think in trades and roofing specific, that can get really far out there. If you're doing insurance work or something like that, I mean, you could be spending. I've seen even my company at one point when we were really scaling and growing, we were over 100 days to turn a job, dealing with mortgage companies and insurance companies and supplementing and it's like, how do you manage a business when it takes you a third of a year or a quarter of a year to collect the money, right? Man, that
Exactly.
gets
You
really
need a lot
challenging.
of cash reserves to be able to survive that. No.
Yeah. And then you got to think about the cyclical nature, some of the things you were just talking about as far as planning ahead. And I know you now I see the picture in the background. You're in Colorado as well, and I'm in Colorado. And don't get me wrong, there's times we can roof in the winter, but not always. There's times where we go weeks on end where you literally don't have a chance to roof. And for me, I know this that for every week that I'm not producing, one, it's costing me pretty significant amount of money. Plus, in 6 weeks from now, I'm going to have a major cash flow hit because I'm not collecting on the jobs that I didn't actually produce.
Absolutely. Yeah.
We got to be thinking ahead of time and not just, hey, when my account's fat, cool, let's go buy a Lamborghini, right? That's pretty sweet. And it doesn't work that way.
Yeah, I think a good forecast helps you to keep discipline in spending. You're not gonna, if you have a lot of money in the bank, then you're always tempted to spend money on stuff. And it doesn't have to be like bad stuff. Like you see this fancy new software that can help you to be more productive, and you think, oh, that's a good deal. I'll buy it, even though maybe you don't necessarily need it at this point. And if you have a good forecast, it just helps you to be more disciplined with your spending. It's same
Yeah.
thing in private life.
Yeah, absolutely. I mean, if it's right in front of you, like what's that age old thing, the more we make, more we spend, right?
Yeah,
It's like it never changes. You just spend more, right? So we have to be disciplined on all aspects of life,
yeah,
right? It's like, you make twice the amount just to spend a little bit more. Like you have to have discipline in all aspects of this. And I can assure you that once you really understand and start applying these concepts, really thinking profit first, thinking pay yourself first, thinking like forecasting of like when the timing is right to spend or to save or to not spend or to invest, it changes your perspective on things, and on how you operate your life. And then you fast forward and it's like, holy cow, I've created a really nice, comfortable life that can sustain the ups and downs.
Absolutely.
And that's one of the things that I'm really big on. Like, when I'm on stages or I'm talking about stuff, nowadays it's almost always a focus on sustainability. That's what I've applied in my business, and I've experienced really big growth and dips and growth and dips. But we've built a model that is sustainable, that we can handle both. When we're really high, great, we're putting money away, we're setting aside money to invest, and we're preparing for the dips in life and business. And then when that dip it hits, it doesn't hurt you hardly at all if you plan for it.
Yeah, and you
So
can
we
still
can't
sleep at
just,
night.
yeah, I mean, and a lot of times in this business, you can catch lightning in a bottle. You can catch a big storm. You can catch that one big project that, that just like sets you, like lifts your business up. And then you have this mindset where like, oh, well, I got this big $1 million job one time, so I'm going to always have those jobs. Or you had that big year, you just adjust your lifestyle and you go buy the bigger house, you go buy the bigger cars, you do all these things to that one big boom in your business. And all of a sudden your threshold raised significantly, and you all of a sudden when your cash dips or the market shifts, all of a sudden you're really feeling the stress and the pinch on that. So I would really encourage those out there to really, don't, as my mom would always say, don't live above your means, and like
Absolutely.
slowly
David
grow
Ramsey
your
is right.
means. David Ramsey, right? The Dave Ramsey philosophy. So now we're getting like personal, but it all correlates, and
Absolutely.
love that. So let me ask you. I got some technical questions for you. For the contractor out there, let's go into the difference between cash and accrual
Good. That's a good
accounting.
one. Yeah. Um, cash cash accounting, you just really go by your bank statement. You see what's coming in your bank account and what's going out. And so you never really know what is my actual profit, because if you look at we're at the end of January. So if you look at your bank statement of January and you think, fine, I increased by $150,000, were you profitable? You probably don't know, because you don't know, is that money that came in, is that because a customer from a job from November maybe now finally got the payment for it, or is that because I did a really profitable project? You don't know it. And if you really want to have good data in your business, you need to have the accrual accounting. um, that's that's a given. It's not open for discussion from perspective of a finance guy.
Yeah, and I've heard that a lot, and a lot of us kind of don't know the difference, or we just think, okay, cash in, cash out, cool. But when you're really accounting, it's got to be run your bit. And the rule of thumb is like run your business on accrual, but you pay taxes on cash. Is that correct?
I'm not a tax professional, and so I can't really answer that from a professional standpoint. But yeah, I heard that's what's being done. But maybe one more thing about accrual accounting. What really is the difference? In accrual accounting, the important thing is that you always have the expenses and the income that belongs to those expenses, that they're in the same period, and you don't have that with cash accounting, because with the cash conversion cycle, you start off buying the supplies in 1 month, and then you do the job. So you have a payroll in the next month, and then maybe it's another 1 or 2 months until you get the cash back. So if you look at certain periods, like each month at a time, then you don't know where you're at, where you're standing. But with the accrual accounting, there are certain mechanisms that make sure that the month that you have the income, you also have the expenses that belong to that income. So that way you can analyze, was I profitable on that project? Was that a good month or was it a bad month?
Yeah, yeah. Well, and then that just brings me to my next one is, project-based cost, project-based, like job costing,
Yeah,
and, cost accounting versus your standard accounting that they've made have taught you in high school, right? Different than in the trades industry, we all need to be doing cost-based accounting and
absolutely.
job costing. What would your best way of explaining that?
Well, the normal accounting that everybody knows, that's basically for the IRS, right? We are following the rules that they set up, just to show, okay, what's the profit that I need to pay the taxes on, and the job costing, that's really, um, you want to you want to find out what is the profitability of a certain job that I'm doing. Like, what are the costs that are associated with this particular project, and that way you can, also, you when you send out the quote, then you have to have some way of calculating how much is it going to cost me, how much do I have to quote that person. And then once you get started with the project, you want to record all the costs that come up for that project, so you can see, okay, where are we at right now. um, are we always are we already in a cost overrun, or do we still have some room? What happens if there are change requests by the customer? You want to track all that, so you can actually, once the project is done, you can look back and see, okay, what went well in that project financially speaking, what didn't, what do we have to change for the next project. Because if you don't know these, if you don't have the data, then you end up maybe quoting too low all the time, and you think, well, at least I get the job, but maybe you're not making a profit, you're losing actually on the project, and then it would have been better not to do the project instead of losing money on it. But if you don't have data, you don't know it.
Absolutely. So there's two angles here. One is the estimating side. You want to be able to be as accurate and have as much clear data as possible, and be as close to possible as exactly how much my materials are going to cost, exactly how much my labor is going to cost. If you're paying a commission, you want to know what that's going to be. If you have an average overhead or what that's going to be, you want to understand what that is as well. And then the other part of that is as you're doing the job, not just after the fact. Don't just look at it 2 months later and be like, oh, we closed this job, let's see where we're at. Like, during the job, you should have a metric where you're actually tracking it as invoices are coming in and as these costs are coming in, so you can know real time whether this job is on pace for, or on target or off target as far as your profitability goes.
Yeah, and it's a good practice to have regular meetings with your project manager and your accountant or bookkeeper or whatever, just every 1 week or every 2 weeks, just to see where we at in the different projects, so you can anticipate problems that are coming up and deal with
Yeah.
them.
Well, and I would say one more thing on that is, a lot of people, whether it's roofing or whatever, a lot of people start with, residential, you know, trade services, residential model, right? But they all see commercials. Oh man, if I can just do bigger jobs, make more money, right? So there's this carrot out there that everybody like really wants to lean in and go into commercial. I have the conversation all the time. We've done a lot of shows on commercial, but the difference is, if you're not doing this and practicing this on a regular basis, you can get yourself in a lot of trouble with underestimating commercial projects and not tracking it during the project to understand where you are with those projects. And you could see, I've seen a lot of big mistakes. I've made a lot of big mistakes, but we've also seen a lot of mistakes happen by trying to go after that big project, and then it just compounds the losses if you don't have structured job costing, principles in place.
Absolutely. And let me tie back to the cash flow forecast. If you start going to those big projects, then you have to be aware that, some metrics are changing. Like, you have to buy more materials that you have to, finance, and it takes longer for you to get paid unless you have a really good contract in place. And just, you have to anticipate this, and your accounts receivables get bigger, so you have to have more cash in place. And if you're looking to scale and do those big projects, then you have to check, like, in all areas of your company, do I have what it takes to do that project? Do I have the right people, the right project management, the right, processes in place? But also, am I prepared financially to take on the additional burden that it takes to make that additional money? So
Absolutely. Yeah. I mean, the reality is, whether you like it or not, you are acting as a bank.
yeah.
Just put it in perspective. Let's just say, make numbers easy. Let's just say on a commercial job, you budget for 35% margin, right? You're gonna, okay, my gross margin will be 35%. And you get a 50% deposit, or maybe even a 40% deposit. You take 40% to get the job started. Oftentimes you're not getting the remainder until that job is done.
No.
So whatever the difference is between your projected margin and the actual cost and your deposit, you're floating that. So
Yeah.
if you're taking $1 million job and you're getting 300, a lot of times it's smaller, like maybe 30%, you can get $300,000 down and maybe you're running a 35% margin. You got to come up with $300,000 to be able to float that job. And we
No.
don't think about that when we see that big dangling, oh, I'm going to go get a $1 million, $500,000 job. And then you don't realize, like, oh, crap, every ounce of all my cash just went into this job. And now I can't pay payroll.
Exactly.
Or
And
you're taking out a note, or you're having to get hard money, or do something. You don't have a line of credit in place to be able to bridge that gap, and you're paying a big interest rate. Did you calculate a 8, 9, 10, 12, 15% interest on that difference in that money within your estimating? Now you took that margin of 35. Now you chopped it in half, or you chopped at least 7, 8% off that margin. And now you're operating a much lower margin. And next thing you know, you're doing a big job of making almost no money.
absolutely, you're so right. No. And if
Yeah.
you plan ahead, then you can, get an SBA loan or something for that increase, and then you're in a good position. And bankers love people who think ahead, and they're not so kind to people who get in a bad position because of a lack of planning.
Absolutely. Yeah, you should. It's kind of a weird cliche or weird like dynamic that if you're gonna have a line of credit or you're gonna borrow money, like you should borrow money when you don't need to,
No.
and don't borrow money when you have to. Like it's like a weird dynamic that with the banks and lines of credit and those sort of things. So, well, as awesome hanging out, man. It's I've learned in my career. I've been doing this 20 years now. Like I'd rather talk more in the number side. There was a time where like, do not put a spreadsheet in front of me. I don't want to hear the numbers. Did I make money? Did I not make money? I don't care. Let's go. Where now I'm like, hey, wait a minute. I really enjoy the process of, I don't do the work. I have a whole team of people. I have CFOs in place, but we have a weekly meeting where during that meeting, there's a takeaway for those of you, and I'm sure Jacob, this is exactly the thing that you can help people achieve is like create an environment where you real time know how much money's come in, how much money's gone out, how much is expected to come in, and how much is expected to go out, which is going to leave you a projected balance on a regular basis. We should get those metrics and have those at its core. Run your business that way. Add in some tracking for your pipeline, and then you can create a predictable model. And I know, that's a lot what we've talked about. So put a button on that, my man, as we try to land this plane. Like, give me your perspective on how to implement that, and as well as how do we get a hold of you if you want to carry on the conversation and we want to learn a little bit more from you. What's the best way to get a hold of you?
No. Yeah, I mean, what you just said is absolutely true. I totally agree. And you don't have to be an expert. You don't have to become an expert in finances. You just have to have the right people on your team. And if you have a big company, then it's good to hire those people. But if you have a smaller company, then that's what fractional CFOs are for. Like, you just get to hire like certain hours of my time. You get the CFO level expertise into your business for a fraction of the cost. And all the things that we discussed, I'm here to help with that. And yeah, the best way to get in touch with me is with over my website. It's peakadvisory.us. I have a contact form, and you just reach out to me. We get a discovery call, and then we just take it from there.
I love that, man. So peakadvisory.us, it'll be in the description below. If you enjoyed this talk, if you enjoyed the podcast, thank you so much for following, for listening. Any sort of comments, give us a review, ask us any questions. Make sure to like, subscribe, share with your loved ones, share with your friends. We appreciate you. Jacob, thank you so much for joining us and spending time with us,
My
and thank
pleasure.
you for what you do, man. Like you do the things that you in the trenches, and you love doing the work that a lot of us front facing, sales go type A people that just want to crush the world. Like we need guys, more and more people like you that truly care and are truly passionate about what they do, and passionate about helping others succeed and others build great businesses. So thank you for what you do, and thank you for listening. Take care, everybody. God bless.